Both the euro and the pound continued to rise against the US dollar. The risk sentiment has improved as major central banks remained hawkish on their monetary policies, while the US Federal Reserve decided to pause its tightening cycle. Yesterday, the European Central Bank raised its key rate by another 25 basis points. ECB President Christine Lagarde also signaled that the regulator intends to raise their interest rate in July. So, markets see an 80% possibility that the tightening cycle will continue through October this year until the rate hits 4%. That's why demand for risk assets remained strong. Besides, there are currently no signs to damage to the euro economy from high interest rates. In fact, the regulator is determined to continue its fight against inflation as core consumer prices are still far from the target set by the central bank. Today, apart from statements by the ECB officials, the economic calendar in Europe features the report on the consumer price index. The CPI is projected to decline to 6.1% in May year-on-year, while core inflation is expected to fall to 5.3%. If this forecast is true or turns out to be better than expected, the euro may develop an upside momentum. At least it is clear now why risk assets are back in demand, even though economists warn about an upcoming global recession at the end of this year. In the US, traders await the publication of the Consumer Sentiment Index and inflation expectations. These reports are unlikely to influence the market. So, a surge in trading activity is expected after the release of the CPI data in the Eurozone. This can cause a spike in the euro, which may enter a correction phase later in the day to close the week at high levels. The technical outlook for the euro-dollar pair on the 1-hour chart. Despite an emergent divergence on the MACD indicator, the euro keeps rising on expectations that inflation in the euro area will decline below analysts' forecasts. The nearest resistance for the pair is seen at 1.0976. There is no need to buy the pair at the current highs. A drop to 1.0932 and its false breakout will be a good opportunity for going long, but this scenario is unlikely in the first half of the day. So traders are recommended to consider the level of 1.0976 for selling the pair. A sharp drop in Eurozone inflation will limit the downside potential of the pair. But if inflationary pressure meets forecasts or stays higher, the upside movement of the price may be limited at 1.0976, which will be a good point for entering short on a false breakout. If the pair advances to 1.1002, sell positions will be relevant only on a false breakout or after a rebound from 1.1029. Bears will probably assert their strength at 1.0976, so it might be difficult for the euro to reach 1.1002 today. If the euro-dollar pair declines, long positions can be considered at 1.0932 or 1.0898 right after a rebound, with a possible movement of 25-30 pips. If the CPI data remains the same or higher than expected, the European Central Bank will see this as the reason for further rate hikes, thus supporting the euro. In case inflation drops significantly, the euro will face an obstacle at 1.0976, from where a downside correction is possible. As for the pound-dollar pair, it continues its bullish trend. Today, no important reports are expected in the UK. The pair has already broken above 1.2798, so its downward retest will generate a buy signal, with a possible recovery of the price to 1.2837 and 1.2876. At this point, sell positions can be opened on a rebound considering correction of 25-30 pips. Going short at 1.2837 will be possible only after a false breakout or after retesting the level of 1.2798. In this case, the pound may decline to 1.2757 and 1.2713, where you can buy the pair on a rebound, considering a correction of 30-35 pips. Please note that it is not a good idea to go short in such a strong bullish market, so it is better to wait until the price breaks through the key levels and settles there. This could be a great opportunity to add more long positions. Good luck and have a great weekend.